Welcome back, folks. This is Greg Silverman for another edition of CIOs and Bowties with my esteemed colleague, Mr. Crook, in the side window there. Welcome, Mr. Crook.
Good afternoon, Greg. It is afternoon in Eastern Standard Time as you and I talk on Monday, the 4th of October, correct?
That is correct. First Monday in October. Can you believe we're already nearly through 21? It's just unbelievable, isn't it?
Difficult to grasp. Time is flying by, literally. There you go.
Yeah. The days are long, but the years are short. That's my new motto. So anyway, folks, it's been a minute since we did one of these. And as you know, just for reference from some of our previous versions, we typically have a informal discussion, myself and David, on the topics of, let's say, topical items of the day. We've selected 3 for you, which I think are pretty good and pretty kind of hit the nerve of what's going on today. I'll just real quick preview the we won't call it the demise of the ESG investing by any means, but certainly a reversal in flows. The other one we're going to speak about is how one becomes liberal or conservative. That should be interesting, if not fun to have. And the last one, the last part of the series will be the demise of fiat currencies, and what's going to happen to the good old dollar bill. I don't know about you, but I do not carry cash anymore. I don't think I've had cash in my wallet for over 6 months. So everything with me is gone electronic. I don't know if you've got the same thing, Dave.
I still carry a little cash on me, but bottom line is, and by the way, the US uses more cash than most of our Western competitors or Western allies. But for example, the Chinese society, many Asian societies, cash is just not a thing. This is a electronic settlement society we live in, and one that's going to become more and more so over the years.
Yeah, not without its risks. Anyway, let's take one thing at a time. Let's begin with ESG investing, if that's okay. And you mentioned that you had a pretty good definition of ESG investing. So why don't you tell us about what that is? It's a good contextual framework to begin with.
Indeed, Greg. I was listening to a podcast, and one of the speakers, Cheryl I. Smith, who is a PhD in CFA, defined ESG investing as the goal of ESG investing, she says, is to construct portfolios of companies that generate competitive returns. So this is risk adjusted in our world, in our financial world, competitive returns at appropriate levels of risk, which also contribute positively to a sustainable and more equitable economy.
Okay, pretty broad, right?
And Greg, if I may, indeed, absolutely. And if I may, just for some people out there that might have seen ESG termed all over the place, ESG is environmental sustainability and governance is what ESG stands for, and it's a term that's being bandied around all manner of financial circles these days.
Yeah, absolutely. And so I know we'll get to the politics of the day in a second, but what kind of caught my attention here, I think it was an Invesco Cleantech Etf. That's right. And there was an article mentioning how kind of a reversal of fortunes, seeing a fair bit of outflows coming out of that ETF, and speaking about the kind of woes as it relates to, let's call it this would be the environmental side, right? So this is clean tech, solar energy, wind energy. I suspect that's more of the environmental nature. So what do you hear in your neck of the woods regarding a turn against ESG investing?
Well, Greg, just going back one step, we know that flows into ESG investing since the election of President Biden have been stellar, for obvious reasons, as one would feel that Congress would be out there supporting the growth of clean energy and the like. Clearly, the Democrats in Washington today have some problems with this, and they're not going to get through a $3.5 trillion bill. It wouldn't seem spending bill. And they're still negotiating as to what that bill is going to look like. But that impacts negatively.
Did you say trillion or billion? I can't even remember now. 3.5 trillion.
Yeah, I used a T, trillion.
Yeah.
Frightening numbers.
Yeah.
In fact, we'll get onto these billion versus trillion versus unlimited amount of monies in a later phase of this discussion, won't we? but in the recent past, it's clear that there is not agreement on how best to do this. It's expensive. It's not straightforward. Even by definition, it's difficult to determine what's good, what's bad. We've all heard the arguments, Greg. It's wonderful having an electric vehicle. It's awesome. In fact, you were in the forefront of that when you had your Nissan Leaf, I think it was called, all those years ago. Was it called a Leaf? Is that correct?
That's right. But let me just point out, the reason I had it was because there were these phenomenal Georgia credits where I think over time, it basically was a zero cost vehicle to you. So they basically gave it away. Yeah.
Right. But the point being, the vehicle itself is wonderful. And however, what happens to the battery? What was the cost to this planet in creating that battery, in mining lithium, in doing all the stuff that we've done to the environment in terms of that? And then how do we destroy the batteries once they're all done? So that's just one tiny example of the debate that goes on between the development of green and clean energies and the benefit to the planet. Because that's all I would suggest we all agree upon that right now, is that we want this planet to be a whole lot more sustainable than it's ever been before.
No, there's no debate about whether it should be done, right? It's just how it should be done. So here's a few stats for you. That aforementioned ETF I was talking about, the Invesco Cleantech Etf, had a peak amount of assets at 5.2 billion, so not insignificant. The ETF was down 18% year to date. I don't have the exact date of that, but it's probably going to be early September, let's say. And let's not forget that in 2020, this same ETF was up 234%. So, regardless of the news of the day, it's the nature of markets to breathe in and out. So on a massive run up like that, I don't think it's down 18% is anything.
Correct. I would agree with that entirely from an investment perspective. You're sitting with Tower Bridge behind you.
Yes,
and for those investors, unlike Greg and I, who are not resident in the United States, ESG investing is old school for our European friends. And I would include the British in that in terms of this discussion. Yes, I know that you're not part of Europe. I get it now. Chose not to be, and that's all well and good. But the US is decades behind what Europe has done in terms of ESG investing. And, some of the portfolios in play and some of the portfolio managers in play in Europe have been doing this literally for decades and decades. And it's really a new asset class or investment opportunity here in the US. But correct, I agree with you. 18% in something that screamed up and attracted the new monies that it has over the last few years. Not much to cry about at all.
Yeah. So another interesting point brought about, I guess, on the fundamental side is, so no surprise here, there's a lot of headaches, or let's call them logistical headaches, that have resulted from the pandemic, coinciding with environmental investing. So, for example, you talk about solar panels, or you talk about wind turbines, the increase in freight costs, supply chain disruptions. So, the supply of the equipment is just not there. And by some measures, the demand has actually fallen off a little bit, although I don't really understand why that is the case.
Indeed. In fact, we've seen just in the last few weeks, Greg, the Chinese in their efforts, and the data we get out of China, I will tell you, I don't entirely believe it a lot of the time, but nonetheless, their efforts to control some of their power distribution from coal power, they actually are having shutdowns, electricity shutdowns across various parts of the country, including some of the big industrial areas. And that, of course, affects that supply chain even more so than it had been affected prior to that. So there are always economic costs to change, always. In the long run, things are likely to be a whole lot better, but there's going to be pain. There's going to be short-term pain, but hopefully for long-term gain as we move into the future.
Right. And so kind of the last thing, if I may, just close this segment out. We should not forget that ESG investing, whilst a totally noble cause, is just another thematic of investing. It's another way to invest, right? And so we've seen so many times, whether you like the thematic or not, we've seen a crowded investment space, right? When so much money flows in. So I don't know, let's talk about real estate. Let's talk about, I don't know, how many bubbles have there been?
Commodities, whatever it might be.
Commodities,
Indeed.
whatever.
Yep.
And regardless of the fundamentals, you'll know, every crowded trade will reverse at some point. There won't be any buyers left to hold the bag. So I don't see ESG being terribly different. It might be a longer cycle, I don't know, but we're certainly getting that, the backing out of the crowded trade, however minimally right now. I'd call it a minimal correction to the ESG movement. So anything else you want to mention on ESG, or we can move on, Dave?
No, I mean, all I will tell you is that from the retail side of investing, our clients, the retail investor in the US is interested in ESG investing, and that's why that space is growing or attracting new capital. That's just the way it is. People realize that we have to be more cognizant of the effect we're having on this planet as human beings, and there is something we can do about it. And whatever that is, the call is for us to try and do something about it, and therefore we've seen this attraction of capital.
Excellent. All right, guys. Well, stick with us. That's the end of our first part. We're going to take a short break, and when we come back, we're going to have a discussion about liberals, how one becomes liberal and conservative, and I'm not sure where you and I are aligned, so it's going to be a fun discussion. So stick with us, and we'll be right back.